Hello and welcome to today's video. In today's video, we're going to look at the margin rate scheme within QuickBooks Online.
Told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it's dark, I told him I would do it all for you, and I know you do it for me too.
Hello, my name's Patrick. I'm a chartered accountant and certified UK trainer. Today we're going to have a real deep dive into a really complex area. That area is the margin rate scheme. Now this is a very particular area where if your business is affected, you can understand how crucial it is to get right, but if your business isn't affected, then you really have no worries with this whatsoever. To make this worthwhile though, I am going to make sure we consider multiple ways in which we can record this. So I've got 3 methods to show you on how to deal with the margin rate scheme within QuickBooks Online. First of all, let's have a real quick explanation as to exactly what the margin scheme is, just so everyone can understand exactly why it's applicable. Okay, if we think about it from a standard VAT point of view, the whole point of VAT is only the end consumer should, quote unquote, suffer VAT. That is done by the fact that we add VAT to a sale. So every time as a normal business you sell a product, you're going to add your VAT on top of there. And then what you're allowed to do as a normal business is claim back the VAT that you've suffered. And the idea is that the end consumer, the one person at the very end of the chain who buys the product, is the one that, quote unquote, suffers the VAT, and the rest of the VAT is passed on. And that works for a majority of cases. But when you take into account the margin VAT scheme, this was introduced because there are some circumstances where when you buy the product in the first place, there's no VAT applicable. And that's what this is all about. So what we got here in the margin rate scheme is a scheme that's been developed by HMRC for those people who are unable to claim VAT on purchases. So only the end consumer should suffer the VAT, that's still applicable, but the people that are unable to claim VAT is if you're buying from the general public. Now this is very, very easy to understand when you think of second-hand cars. If you're going to buy a car, majority of the time as a business, you're going to buy that car off a general public member, and it's very unlikely they're going to be VAT registered. Therefore, you're buying a car with no VAT whatsoever. If then you go to sell that product and you just add VAT onto it, you're going to eat massively into your profit, and in some circumstances the VAT that you have to recover or that you have to charge on there will be more than the profit you made in the first place. So this is a particular scheme for those sort of scenarios where the VAT is only added to the profit made. Therefore, again, the whole scheme is working as intended in terms of VAT, and the net effect is the VAT is again passed on. Just to clarify, this scheme is designed for when you've bought something with the intention to sell it on, but you've bought something off an individual who isn't VAT registered. Therefore, there is a scheme available where you can only need to reclaim or charge VAT based on the profit that you've made, so not the full total of the sale. Now, as you can imagine, that's quite a complex transaction to deal with, and that's also something where within QuickBooks there's no magic wand, there's no magic button for you to actually just be able to account for that. So we need to be very critical and we need to be very creative in the way that we put those transactions into QuickBooks to account for them correctly. Now, as I said at the beginning of the video, I have 3 ways in which we can achieve this. And really, those 3 ways are based on your business needs or your client's needs, and it's about which one suits that particular client. Okay, so the 3 methods I want to talk about. The first one is creating a type of sales template. And this is really useful for clients where they're selling lots of high volume of a particular item. So think about the UK reseller market. They're buying stock off the general public to then sell on. If they're over that VAT threshold, they have the option to use the VAT margin scheme so that they don't have to eat into their profits. And the quickest way to achieve that for them is by creating a sales template so they can quickly go in and account for each transaction. And when we do that, I'm classing this as a solution within the product. The next one is a solution again within the product, but it's using that stock management functionality that's so useful in QuickBooks. So if you've got a client who needs to account for the stock, they need to figure out how much stock value they're going to be. So this is really aimed at your car salesman. They want to be able to find out at any point what the list of their stock is, what the value is going to be, because it's going to be so valuable for them. And when it comes to year-end accounts, they also require that information as well. So we're going to have a look at a particular scenario where we're using the in-product method, but we're adding in complication regarding stock management. And finally, looking at journaling the difference. And this is basically saying that the solutions we've got are too complex, or the way in which our client is working things is just too complex to do it on a transaction basis, and it's difficult to keep it in the product, where we're going to make it nice and easy for us to create a report so that we can go away, do the calculation in the background, and then come back into the product and post a journal entry to correct the VAT return that's about to be posted. There's no right or wrong way in which to do this. Each one of these methods are designed to make into account the different types of clients and businesses out there, and really you've just got to find the best fit for your particular scenario. Method 1. Let's talk about how we're going to be able to make a nice little template so our clients can go in and put that transaction in. Okay then, so first and foremost, what we need to talk about now is we need to create a nice little template so that when our client comes to make those sales, they can account for them accordingly. If we deal with these transactions in our quote unquote traditional way, so if we attach, say, a PayPal account, or we looked at looking into just importing sales invoices, then we normally get the option of, do we want to put VAT on at 20%, or do we not want to include VAT on? And in this case, both of those scenarios wouldn't be right. So let's see how we can build it so that when we account for the transaction, all right, first thing we need to do is we need to go in and create a product and service. And we're going to be using a product and service called bundles. So before we can do our bundles, we need to actually create ourselves 2 different items. So the first thing we need to do is put our original cost in as a service. Now, when it comes to the income account, we could be a little bit savvy here and maybe split that up if we need to. But the key thing is we don't want any VAT on this whatsoever. So I'm going to put it to 0. And I'm going to do save and close. So that's given me an original cost element. Then I'm going to press new. I'm going to press service. And I'm going to put profit made on sale. That one, again, you might want to be savvy with your income account. For this one, we're going to keep it nice and straightforward. And our tax, we want to put in at 20%. But we want to make sure it's inclusive. Save and close. So our final bit that we want to worry about is a bundle. From a bundle point of view, we're going to say sale of margin rate. And we need to include those 2 transactions. So it's the original cost and the profit made on sale. Save and close. Now, if I went to do a sales receipt, and I keep my customer nice and generic, so I've even got one called margin scheme sales. I'm just going to do it to cash for this one. I choose my margin, sale of margin rate scheme, and it gives me 2 boxes. Within there, my first box, I'm going to put how much I originally paid for the transaction. I'm going to make sure I'm inclusive. And when I put in my profit I've made on it, notice what's happening at the bottom. It's on that transaction itself, so utilizing the actual transaction, it's gone through and it said that I'm only need to pay £33.33 over on the £1,200 that I've made, not the £200 that you would expect to see if this was using the full scheme. But if I was to look at a print and preview, I know I haven't put anything in the description, but if I had to put something in the description, then it says sale of margin rate scheme. Maybe you would have a description there, and then you'd have the item accordingly. Now, this is the one thing I would say about this particular method is if you don't use this if you're going to be using QuickBooks to send out the invoice. There is a workaround I'm going to show you on the next method where you can make sure this actual doesn't show the VAT breakdown, but really you don't want to be showing that over, because what you're effectively doing is telling the end consumer how much profit you made. Okay, what I would do now is I'll go over to my customer margin scheme sales. Now, the reason I've called it margin scheme sales is so we can keep it all nice and separate here, and also it speeds up if you ever have to do any for this again, because all I need to do is do a copy of this. I can then complete my sales receipt just as I need to, and all I need to do is override how much the original cost was, how much profit I made, and it will account for my VAT accordingly. So that's method number one. What it's really designed to do is for your client or your small business where you're trying to utilize it the best you can. You're trying to make use of most of the QuickBooks as ways in which to quickly get the information in there. We've got 1 or 2 items, or you've got a handful of particular stock items where you're able to claim that margin rate scheme. So this is going to just speed up that process for you, get that data in there, and you're going to be able to get it nice and quick. One of the nice things about doing it this way is all in product. So the calculations and all the transactions and everything else are all sat there. To make it even nicer, what I would tend to do is those sales items themselves. So if we just bring that one of those back up again, I would tend to use this attachment box down here, and I would take a copy of that original invoice and I'd stick it in that attachment there. That way, no one can ever say where those figures are from. If you ever did get an investigation or anything like that, all your data's all in one nice place. It's going to make your life easier. Method number 2. Now this one is far more complicated in terms of the steps needed and everything else, but this is really useful if your client or your small business is trying to use the stock management feature. This keeps everything within QuickBooks. You won't have to go away from anything else. So this is really designed, as I said before, for people like the car industry or selling second-hand cars. Okay then, so how are we going to account for this? First and foremost, let's make sure we've got our stock management on. So I'm going to go accounts and settings, going to go into sales, products, and I'm going to track quantity of stock on hand. Press OK. And what we're going to do is we're going to use each time we buy a new car, we're going to create a brand new product and service stock item for that particular item. So to show that, I need to show 2 different ways of doing this. The first one is I'm going to go and show the purchase of the vehicle. So my first thing here is I've got to purchase a car from a non-VAT registered individual. So that supplier name could be whoever that person is. So in this, I'm going to use Andrew. And what I want to do now is I want to account for that purchase. So I'm going to just use today's date. And the key here is I'm using item details. That's because I want to create a brand new product that's going to be able to be sold at a later date. And I'm actually going to call this what it actually is. So I'm going to create a brand new stock item, which is the actual car registration of this item. So let's just say it's AA11ZZZ. Now, when I add AA11ZZZ, I have the option of doing a stock, non-stock or service. I'm going to class this as a stock item, and my initial quantity of hand is 0 as of today's date because I'm buying my first one in. Now, my income account, I have to leave as sale of product and income, and that's absolutely fine. And my expense account, I'm going to leave as cost of sales as well, and I should be fine with that. Now, one thing I want to do is save and close. So when I create this brand new product in, maybe I want to say what the make and vehicle is. I can do that separately. But let's say I bought this product for 2,000. Now, this has got no VAT on whatsoever. So I've bought an item for £2,000. VAT wise, there's a debate about if it should be 0 or no VAT. But for today, I'm going to put 0. Then we can press save and close. Okay, so that's accounted for the transaction as well. So if I was to run a stock report, you'll see now I have a stock of £2,000 relating to this particular product. Okay, so now I need to go and sell that product on, and I'm going to use the same method as I've been doing just then. The only difference is I want to make sure that, again, I account for it as a bundle. So before I go and make the sale, I need to go into products and services. I need to create a brand new bundle, and I'm going to call that bundle sale of AA11ZZZ. And within that bundle, I'm going to include the original purchase, and then I'm also going to include the profit made. So in my bundle, I've got the original purchase, the profit made on sale. I can save and close. And now if I go to create a sales invoice this time, because I'm accounting for it, I would want to go and say who the customer is, So in this way, I'm going to say Andre. I'm going to do the same date. So say we bought it in today and we've sold it today. But I don't want to choose that item. I need to choose sale of AA111. And to make this even cleaner, you can use categories to make your list work better for you. That way, the amount that I made on here, that way I would put in the amount that I paid for the item. I then put in the profit that I made on this particular one. Let's say I made a nice £1,000. I'd make 1,000 profit. Let's say I made a really nice amount of profit on that one. And there we have that breakdown, that split for us, where it's given us in product the breakdown 166.67, which is based purely on that £1,000, and therefore we're not paying it on the full 3,000. If I then save and close that one, or save and send it, whatever I need to do, and then went back to that stock valuation one more time, now we should find, and now you can see the stock has been gone down to 0. We even have who we bought it off, who we sold it to, and we have a nice little breakdown of that going forward. So as you can see with that one, it can be a little bit fiddly. Also, there is a kind of few caveats to this that you probably want to consider. The first one is products and services. Categories is going to be a real quick and easy way to get this nice and tidy for you so that this list doesn't become unbearable. The other thing though is when you come to send that invoice out, what I've been doing for our client is I've gone into the QuickBooks Labs. I've ticked the box import style, and that's given me the opportunity to create a template of the VAT, and then when you import it in, you can take away the no VAT whatsoever. So the way that works is basically I need to import this item. So what I'm going to do is I'm going to custom form styles. I'm going to brand new style, but this time I'm going to import style. You only get this option if you've included there. I want to import a new invoice. I'm going to browse one I've prepared earlier. I've just called it no VAT invoice. I'm going to press next. It's going to check my template for me. I'm happy with that. Saying, am I happy with my style? Sounds all right to me. Press save. And then I would call this something like sale of car under margin scheme. Nicely done. Then when I come to go to the sale and I do and bring up that invoice that we've just done, now I'm going to select sale of car under margin scheme as my new standard, as my style. When I do print and preview now, key to this is it's now not showing anywhere that actual VAT breakdown for me. And that's exactly what I want to do. Obviously you would put the company name and everything else, all that sort of stuff better up there and your logo. But just as an idea or as a way of sharing you, that's how I'd make sure my invoice is complete. So that's method 2. Again, this one is a little bit more complicated. It's got a few more moving parts you've got to make sure is in line. But if your client or your small business wants to keep everything within QuickBooks, this is by far the best way of achieving that when it comes to stock management being turned on as well. You get that lovely way of being able to keep all your stock within QuickBooks. You get to see all your stock valuations moving around, and also critically on this one, you're going to have the opportunity to make sure that you have everything in the product in terms of your VAT and how that works. Okay then, so moving on to our third method. Now this particular method here is about basically doing all the calculations and everything outside of QuickBooks, but it's still really straightforward. We've got a really nice way of completing it for you, and we get to use some nice reports within QuickBooks to make that easier. So in this case, what we're going to do is I'm going to go back to that dashboard, and this time what I'm going to do is I'm going to create a stock asset when I create a bill. So I'm going to use the same scenario we've just done, but instead of keeping it in product, I'm going to do the same idea, but I'm going to do it using method 3. So this time I'm going to go and buy a brand new bill, or a brand new car should I say. Might as well keep it the same guy, Andrew. I'm going to keep it on today's date, and you can see his product here, 8811ZZ is there, but this time I'm going to call it method 2. Now I'm going to create a brand new method 2 one. So to go from there, I go to stock. Again, just make sure you've got your initial quantity of hand in. So I'm just going to put today's date as 0. It pretty much always is going to be 0, so that makes it nice and easy for you. And the key difference here is you want to make your reports easier for you. So I would recommend here is creating a brand new income account. I would call that margin scheme sales. And you've got to make sure at this point that the sale of product income is set as detailed. Press save and close. And I want an expense account again, so I can make it nice and easy. Margin scheme, purchases. And do make sure you've got that there. Now I'm going to put both to 0% for now in terms of VAT. And save and close. So this time I'm again buying £2,000. I'm just going to make it inclusive just to make sure that it won't make any difference whatsoever. So I'm buying that same car for £2,000. No VAT on this one because I bought it from a non-VAT registered individual. Save and close. Okay, so all I need to do now is actually sell this vehicle. So what I'm going to do is I'm going to go in and I'm going to do an invoice. We're going to do the same as last time. So Andre is now buying something off me. I'm now going to pick the method 2 stock this time. And again, we sold for £3,000. Because I've got 0% on, it's not going to put any VAT on for now. So I press save and close. So now, from an accounting point of view, I've applied all the transactions in terms of my raising a sales invoice and raising a purchase invoice. The only thing I haven't done is I haven't accounted for VAT at this point in time. What I've also managed to do, just to clarify and keep everything nice and clean, is I've also managed to be able to keep that stock exactly how I want it to be. So before we go any further, let's just visit our stock. And we have 2 stock items, AA11ZZZ, 0 because that's what we did originally, AA11ZZ method 2, 0 because we've now accounted for buying and selling that stock item. Okay, so the only thing we need to do now is account for the VAT. And what we first need to do is figure out how much VAT we need to account for. But we can do that quite easily by jumping into our report section, going into profit and loss. And because we were savvy in the way that we named our products, we can go to customize, make sure our date range is how we need it for our VAT return. In this case, I'm just going to do for May. And then from a filter point of view, I need to make sure I get this distribution count right. So I want margin sales and margin scheme purchases and press run report. And what that's done is taken everything away. And what that's done is taken everything away from the profit and loss account and left me with only the profit that I've made on my margin scheme. Personally, what I would do is I'd take a copy of this as proof of my calculation of my margin scheme, and then all I need to do is put a journal entry in to account for that £1,000. I'm just going to duplicate tabs and we can come back to this if we need to. So I'm going to do new journal entry. I'm going to put a credit against my margin scheme sales, and what I need to do is, because I've made £1,000, I can use my onboard calculator to do 1,000 divided by 1.2. That's going to gross it for me because I'm going to put 20% VAT on. And then the key thing is I want the other entry, I almost want a VAT only transaction here, so I'm going to do against the margin scheme sales one more time, but this time no VAT. And what I would do here is in the attachments area is definitely consider putting in your reports to back this up. So possibly thinking about putting this in, something like that. Then I press save and close, and that transaction has been accounted for. So that was method 3. As you can see there, a much quicker way of being able to kind of account for things because you're not having to do transaction by transaction. So from some circumstances, that will definitely be a viable option for your business or your client. Just to make sure we've got all this right, let's run a VAT return, but let's keep it nice and simple. So I'm going to do a VAT audit report, but I'm only going to do it for today because all the transactions we put in were for today, and I'm going to press view. So from my VAT audit report, my VAT 100 report is showing that I owe £450. That has been made up. If I scroll down, here was method 1, and here was method 1 again when we quickly replicated it. Here was method 2 randomly at the bottom of the list for some reason, and then here was method 3, which was us talking about using the journal entry. So as you can see, method 2 and 3, they're exactly the same end result. It's just that we've gone about them in a different way. And there you have it, 3 methods where you can account for the margin rate scheme within QuickBooks Online. Now again, this is a really complicated area, but I do believe using these methods, one of those 3, you're going to get the best way in which you can account for margin rate scheme within QuickBooks itself. The method which you choose is all dependent on your business or your client, and it's about finding the right fit for them. Hopefully that's been useful to you. Hopefully that's going to let you tackle margin rate scheme a lot more efficiently and keep it as within the QuickBooks product as you possibly can. I've been Aaron Patrick. If you want to support this channel, please make that like and subscribe and all that sort of stuff so that we can continue to grow as we do. One of the next videos we're definitely going to have to start looking at is partial exemption, so make sure you subscribe to keep an eye out for that one. If you have a better way in which you can account for margin rate scheme, do let me know in the comments below, and obviously I can do a follow-up video accordingly. Thank you for watching, and I'll see you in the next video.
I say yeah. I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it starts. I told him I would do it all for you, and I know you do it for me too. I can be a fighter if you want. I can be a fighter. I can be a fighter if you want. I can be a fighter if you want. Oh, the way that I feel, yeah, I know that it's real, 'cause I can get him out of my head. I don't care what we do, everything's feeling new. Even if we stay in bed, my heart is saying yeah.